It's been a sad couple weeks in the crypto markets as Bitcoin and all its little children have taken an absolute pounding. With the market cap dropping more than 60% in just a few weeks, many people are beginning to ask, is crypto over? Travis and I aren't happy with what's happened, but we're also not surprised, and we're here to provide you with some perspective that may prove useful. Should you continue buying the dips? What would Ronnie Moas say? And what about Naomi? Let's explore the truth in this Bad Crypto soap opera edition of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
Dippity-doo-dah, dippity-a.
Damn, this dip is really making me angry. Where'd crypto go?
My portfolio is just like everybody else's. I mean, we're down more than 50% just on paper or on, ones and zeros in the internet realm. The crypto is just gone poof. But I don't know. I'm not surprised. Are you?
Well, I was really surprised at how fast that everything went up. So if we actually look at the market, on Thanksgiving Day, that was the first day that it hit $250 million market cap. And then on the 29th, it hit $340 billion. And then it went down again. On the 30th, it was down to 278, and then up to 360, and then 452, then 360, then 490. Then December 19th, it was up to 640 billion. And then on January 7th, it hit 835 billion. And then it went down. And a couple days later, it was down to 650 billion, then up to 700 billion. And now we're down at 350 billion or something?
A little less than that. And that's what we're going to talk about here in this Quickie. It's the Bad Crypto Podcast, the show for the crypto curious and the crypto serious. And we are your co-hosts, Joel Comm and Mr. Travis Wright. And we're recording this Quickie because we know a lot of you are wondering what the heck's going on. And we're bad, and we don't know. But I'm in Valparaiso, Chile, after giving a talk for Enel Energy in Santiago, and Travis is in Kansas City, and I'm recording this.
I didn't give a talk for anybody. I just hung out in my house, not doing anything.
Well, I thought, let's do this. We didn't have an episode scheduled today and want to kind of get you guys up to date on what's going on. So, when this started happening before I left for Chile, I told you that I decided that it was a good time to take some profits. And I didn't take a lot, but, I sold little pieces of my portfolio and I put some fiat in the bank because we are not yet at the place where we are using crypto for, paying our bills, for paying, our car payments or rent or credit cards. For the most part, we're still using that dirty fiat. And so I put a little money in the bank, and I'm glad I did. Hindsight's 2020. And of course, if I had known, I would have put it all in the bank and rebought now.
Yeah. Now, but what kind of tax issues would that have created?
It would have created big tax issues. But here's the deal. Even though I put a little in the bank, I'm not concerned. There's people actually out there asking the question, is crypto over? And I just can't imagine a more panic-driven, short-sighted question to even be asking at this point when blockchain technology is just in its infancy. It's just learning to walk. And I think what happened, Travis, at the end of the year is rather than just letting it learn to walk, people are like, oh, you got to run, get on board this crypto thing. It's going to the moon. And that was crazy.
Well, I mean, what I noticed about the end of the year and the beginning of this year was very peculiar because I had never seen gains like I did like the last 2 or 3 days of 2017 and then up until the first couple of days of January. And then it hit a high and then it started coming down. And what's interesting is that, they have had that same thing happen over the last few years in January. It's almost like it gets a peak and then all of a sudden it sells off a whole bunch in January, and then it slowly starts rebuilding up over time. Now, I mean, if we look at what happened last year, you can zoom in on the total crypto market from last year, and we're sitting at, I think, right at the beginning of the year, it was right at 17.5 billion, and then it went up to almost 25 billion. That first week of January, and then it went down to below 15 billion, and then it trucked up to 20 billion again, and then it dropped down to 17.5 billion. So if you just kind of look at the charts and how it's not irregular to see this happen in the beginning of the year. But once these numbers start getting as large as they have gotten, right? When we're talking 800 billion or 850 billion down to 350 billion, I mean, that's a $500 billion swing. Now, when you're talking 25 billion down to 15 billion, I mean, that's still a significant, percentage drop. And we're talking, not so dissimilar drops now. And you know what? When you take off and you grow 500 and some odd percent, don't be surprised if you drop down 60, 70%, right? It's not a surprise. I mean, we're still way above what we were at Thanksgiving. We hit 250 billion. We're still at 350 billion right now. That's $100 billion more. And that's only like 2.5 months, Mr. Joel Comm.
Well, and here's some other perspective for you. A year ago, Bitcoin was just over $1,000. And a year ago, Ethereum was what, $12, $15? And, it went all the way up to $1,400. And now it's sitting at about $740 at this moment. Of course, by the time you hear this, those numbers could be way off. But, when you look at what some people in the space are saying that have been around in a while, John McAfee, take it for what it is. But, he says this is the greatest buyer's market in crypto we've seen in the last 6 months. Buy the effing dip is what he said. Ronnie Moas tweeted today that he's putting where his money where his mouth is. He says, I bought 3 Bitcoin at 8,400 late last week, buying 3 more at 7,700 today, hoping turn lemons into lemonade. And he's like, if you're betting on this more than what you can afford to lose, then you're making a big mistake. He also reiterates, be greedy when others are fearful and be fearful when others are greedy, which is, of course, a Warren Buffett quote.
Yeah. This here, if you look at 2017 seems to me to be just such an anomaly because, Bitcoin grew from January 1st to December 31st of last year by over 1,300%. Ethereum, 8,600%. Ripple grew over 30,000%. Litecoin, 5,000%. Monero, 2,400%. Right? So there's been a lot. Dash grew by 9,000%. What kind of growth and what kind of industry have we ever seen that has this kind of growth in 1 year? Those numbers are just, not only are they an anomaly, they are such an anomaly that of course you have to have a correction. Now, I feel for the folks who got in at the all-time high, right? Because especially a lot of new folks have gotten into the crypto game, and some of them have purchased Bitcoin when it was 18,000, 19,000, thinking that it was on its run to 100,000. So there's been a lot of people who have, at least on paper, lost money, but they only really lose when you sell. And so if you sell, when you buy high and sell low, that is the opposite of what you want to do in the crypto space. So, after you've gone through a few of these dips like Joel and I have here, this is not the first big dip. This is like maybe the third or fourth big dip that we've kind of gone through. This is probably the biggest dip that we've seen. But after you've gone through a couple, you kind of just go, it always comes back, and don't sweat it. Don't sweat the small stuff. It's all just magical.
Internet
money.
Well, perspective is important. And I ran across a great post by a guy who goes by the name Super Dad on Reddit. That's with 2 U's, and we'll link the post in the show notes. It's on cryptocurrency. And he provides some really interesting analysis of why the prices move so quickly. And what he says, it has very little to do with money invested and more to do with human emotion, with opinion, has to do with fear and with greed. That's what drives things up and down. And, the people that are not fearful and understand that how this works, this is an opportunity for them to take your cryptos. They will allow the price to move a whole lot on very small transactions. And so it's a really lengthy piece. I think, did you read it, Travis?
I did. Yeah, it was a really fascinating piece because it does talk about how, when one buyer might put up a big wall, like they're going to sell something, and then that freaks out people. And then so they start selling, and then they pull that out and they never actually even sold it. And then they lower it and move things around. And then one person comes in and makes a purchase, and maybe they only even buy $1 of that lower priced one. Well, then boom, that just tanked the whole market from maybe $11,000 down to $4,000 just with one small purchase. So I would say if you are driving or if you are listening to this without a computer in front of you, go to badcryptopodcast.com, click on the show notes on this episode and read that post, because that really talks about the emotions that come into play during this whole crypto space. And so, it's not a lot of money in some cases that's moving things up or moving things down. It's perception and it's opinion and it's emotion.
Mm-hmm. And speaking of emotion, there's a chart that we'll link to from decentral.market about how to profit from a crash or correction. And this chart in the middle of this article has a cycle of market emotions, and you can kind of picture the curve. It goes from optimism up to excitement, up to thrill, up to euphoria, which is the point of maximum financial risk. And then as it starts coming down, you have anxiety.
That was probably when Bitcoin was nearing $20,000. Yeah. Everybody was cryptogasms.
Right. And then as it starts coming down, we go through anxiety. Oh my gosh, what's happening? Then denial. Oh no, this can't be happening. It'll bounce back any moment. To fear, to, oh my gosh, this is really happening. To desperation, to, I'm going to lose my money. To panic, where people sell like crazy. To despair, which is the bottom of the cycle, where people think it's over, to pack it up, take your Bitcoin ball and go home because this thing has failed. And at that moment, the cycle says this is the point of maximum financial opportunity, because then it goes from upwards to depression and then back to optimism, and the cycle repeats itself.
So would you say the point of maximum financial opportunity is when most people are in despair, and if that's the low point of the dip, then that goes back into what Warren Buffett has said, right? Is be greedy when people are fearful, and be fearful when people are greedy. So when people hit that euphoria state, that would have been a perfect time to exit the market. And in theory, based on the cycle of market emotions, right now would be one of the best times to get into the market. I mean, if you're looking, it's like we've gone back in time right now. It's like we've gone back into October. Some of the prices on this stuff, I mean, Monero is less than $200. Neo right now is around $80. Dragon chain is around $1. I mean, we're looking at a lot of the EOS is like less than $8. And so like, these are some really good prices on coins that have been much, much higher. And just based on those principles, knowing that some of these coins have really strong principles and they have really strong solutions that they're working on and great teams, a lot of these are going to bounce back in big, big ways. I think Lumens right now is under a third of $1. It's like 33 cents or something right now. Ripple's like 80 something cents. So like if you had some extra money to buy, it's that thing called cost. What is it? Dollar cost averaging. So maybe you bought one Bitcoin at, $20,000. Now you buy another Bitcoin at $7,000. Now you have two Bitcoins that you spent $27,000 on. So essentially you got those two Bitcoins for around, $13,000, $13,500 or something. Maybe you buy another one and then you're like, all right, now I got these down around, $9,000 a piece. So cost averaging on your dollar is a good sort of psychological thing to do, and it makes your portfolio seem better.
And of course, we are not financial advisors, but make your own decisions here. Ronnie Moas posted in the Bad Crypto Mastermind a chart of the growth of internet users in the world from 1995 to 2010. And it went from, in 1995, 16 million users to 2010, 1.6 billion. Of course, it's much bigger than that now, but he puts a quote on this photo that says, "We are in the early stages of this game. Crypto will either crash and burn or go up 5 to 10x from where we are today in the next few years. In a best case scenario, the crypto users chart will look similar to this internet users chart 15 years from now. We're today with crypto where the internet was in 1996 when we witnessed the Netscape watershed moment." And I don't disagree. Whatever happens with Bitcoin or any crypto, blockchain technology is here to stay. It is revolutionary. We're not shutting down the blockchain shop and saying, well, okay, screw this, blockchain technology. We're just not going to use it. There's no way that's happening. It's not happening in the same way that after the first dot-com bubble burst, people said, well, we may as well shut down the World Wide Web. There's no point in building websites. It's not going to happen. It's here to stay. And that is why I'm hodling. If you're stressed out about this stuff, then go outside and play. Whether you sell or not, go get some fresh air. Whether you buy more or not, go spend time with your family. It's just money. And if you are investing so much in this that it will affect your mental well-being, your emotional well-being, whether, if it goes down or if it goes up a whole lot, then perhaps you should take a look at whether or not you need to be investing in something as volatile as these markets. So one more piece of news I want to toss in, Travis, just because you mentioned Litecoin, and that is an announcement that came out. Litecoin payment processor and card provider LitePay launches February 2018. This is, I guess, a way to offer lower settlement charges for payments than credit cards currently offer. Up to 3%. Credit cards charge up to 3%, but this is supposed to be much smaller. And nobody saw this announcement coming.
Yeah. And what's one thing that I found interesting about it is it didn't impact the price at all. It's like, oh, here's this amazing thing that's coming out that's going to be expected to have a ton of adoption from these retailers. And not nearly a blip on it. It was like, yeah, cool.
I don't think anything short of Amazon announcing that they were starting to take Bitcoin would move the market positively, as much fear as there is right now. I think it's going to take a little time. I don't know if we've seen the bottom yet. I mean, there's some people that say 5,000-6,000 is the bottom on Bitcoin before it,
Well, that does. If you look at the chart of Bitcoin of where the support levels are. I mean, if we're looking at this from the whole year, it does appear that right at about, 6,200 appears to be a low that was there. So if we hit under 6,200, then it would most likely go to maybe 5,600. So we'll have to see where that support line goes. Hopefully it doesn't go below 5,000. But if it does, guess what? That's a nice dip. And that is 5,000 is 4 times lower than the all-time high for the most part. So, you know what? There's people going to make a whole lot of money. And I guarantee you that, with Wall Street and more of those folks who have gotten involved in crypto, they love this because now they have a chance to get in on some of this stuff at much lower prices than before. And they like you to sell them because then that allows them to get their hands on some. So I'm not selling my Bitcoin. I haven't. I hold on to that. I don't have as much of that as some of these other altcoins that I enjoy because I think that those are going to take off. But I mean, this is what it is. And anytime you get really scared in the whole space, then what you really need to do is just zoom out. Don't look at the last month or the last 3 months. Look at the all-time high and look what's happened every single time. We've had a bump and then a bump and then a bump and then a down and then a big bump and then a down. So you know what? In the grand scheme of things, when it's all said and done, this will probably look like another one of those tiny little blips.
So be of good cheer, my friends. Life is good. The the technology that underpins these cryptocurrencies is not going away. And if you think that companies won't be investing in building on these technologies to create services that will better handle what they do now to better serve mankind, then maybe it's not the market for you to be in. But for me, I've seen this before, and I'm not going to let, does it suck that the markets are down? Yeah, nobody likes to see their portfolio bleeding. But my sense is that all will be well, that the technology is in its infancy, and that I refuse to panic sell. Just not going to do it. Not going to happen. Nope.
Not refusing to panic sell. I choose to panic sell on my own, you guys. You can't make me.
You know what's
these
funny,
emotions. I'll panic sell if I want.
What's funny is that our peers and people who are naysayers, they always come out of the woodwork and go, see, I told you it was a bubble. With this fundamental misunderstanding of what this is actually all about. And then when it does go back up, invariably they will disappear, as it goes back up, and the I told you so's will not be saying I told you so until it gets high again. Then they'll come out of the woodwork again. Oh, it's a bubble. It's too high. It's going to crash. It's never going to work. We're all doomed.
We all feel bad. Like, it's like, oh, those poor people who bought, Bitcoin at $1,000 and now it's at $8,000.
Yeah.
See, told you it was a bubble. Like, really?
Well, hey, if you want to join the conversation, come over to the Bad Crypto Mastermind at badco.in/mastermind. And there's some good content that's being posted over there. And hopefully it will put your mind at ease. And again, keep things in perspective. It's only money. And if you're investing so much that and you see it going down, that it's impacting you negatively, then maybe it's time to reevaluate your investment strategy. But what do Travis and I know? Because we are not financial advisors.
You know what? We are just enthusiasts of the blockchain space and cryptocurrency fans, and we're having a good times with this. And so we, as always, appreciate you guys tuning in and listening to our musings and ramblings. You know what? We've had some really amazing people on the show, and we're going to continue to have amazing people on the show. This, again, was just sort of a quickie. We wanted to reach out to you guys and give you a perspective of what we feel is going on right now. And Joel, he's hanging out in Chile and taking time off of his chill time in Chile to have a little podcast for you all. So thank you for your time, Mr. Joel Comm. You are so friendly.
Absolutely. And for all the citizens of the Republic of Bad Cryptopia, you can consider this a crypto hug from Travis and myself. And it just bask in it, bathe in it, as though, oh, I feel the warmth from Travis and Joel. It's actually more like a bear hug from Travis because he's just a bigger human and has the ability.
And actually, I just peed in the pool. So I apologize for that. The excitement and the depression and the despair and the optimism that I had.
Travis is leading by example so that you can all stay bad.
Who's bad?
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.